It is time for Trading Nation. And check out Campbell Soup, shall you? This epic food fight. Campbell Soup taking a hit on fears that Third Point's Dan Loeb could engage in a proxy fight for all the soup he can eat. Meanwhile, Grubhub is eating it for breakfast. The delivery service overtaking Campbell's in market cap and on track for its best year ever. Matt Maley is with Miller Tabak. Chad Morganlander is with Washington Crossing Advisors. Matt, you go first. What do you think about this food fight, Campbell or Grubhub? Who do you like more and why?
Well, you know, I like to be a bit of a contrarian, and I'm going to stick my neck out here and actually call for Campbell's to do better. And it really it doesn't have anything to do with the fundamentals, and it's more of a multi-month call rather than a very long-term call. But just look at Campbell's first. You look at its chart; it's broken above its trend line going back to the beginning of the year. If it can stay above that, that'll be positive. I have to admit, though, that when you come to proxy battles and things like that, technical analysis isn't very helpful. However, I think the consensus seems to think that the worst-case scenario was a breakup of the company, and J.P. Morgan is talking about a sum of the parts value of $45, so its downside should be somewhat limited. That's not the case, I think, for Grubhub. Looking at that chart, you look at its monthly chart, it is very, very, very overbought. I mean, the stock's basically doubled this year. Its RSI, its monthly RSI is up near 90 at 89. That's very, very overbought. And the stock's trying to make a higher high, and if it can't do that, I think a lot of these momentum players will finally take some profits in the name. So near term, I think it could be see a pullback. All
right, Chad, Matt is a hungry man. He likes Campbell's. What do you like?
So I agree with Matt. This is a typical example of high momentum stocks versus low momentum stocks. Grubhub has sales to enterprise value of roughly about 14.5 times. That's sales to enterprise value. PE multiples over 40 for next year. And then you look at Campbell Soup and all these other staples companies, and you see real value there. So we would actually go with Campbell Soup. A couple of other safe companies to buy that have quality, rising dividends, Pepsi, Hormel, Smuckers, as well as Procter & Gamble. We would buy those and put them away for several years. I think that you can get hurt with companies that have high momentum, high multiples at this point in time.
Soup for two. Thank you very much, gentlemen. Appreciate it.
Thank you.
For more Trading Nation, head to our website or follow us on Twitter at Trading Nation. Soup will be served.
Volatile markets are a good time for longer-term investors to review their asset allocation plans on their core holdings. If you're overly concentrated in a specific stock or sector, volatility will probably do more damage to your portfolio. Diversified accounts generally fare far better when volatility increases.